Hello and welcome everyone. My name is Anu Singh, and I welcome you all on NTEEP, which is a incredible organization that works for the entrepreneurs, their startups, and we are doing this work from many years. And today's session is about accounting and taxation. And the speaker for this session is Mr. Ikenna Nebo. I welcome him. Hello and welcome, Mr.
Yeah,
Nebo.
hello.
How are you?
Yeah, I'm very fine. And how is
Yes,
everyone?
first of all, thank you very much. First of all, I would like to speak something about Mr. Nebo. Actually, Mr. Nebo, his journey as a beneficiary of NTEEP 2.0 showcases the incredible potential of this transformative program. A seasoned accountant he is, with a bachelor degree from Enugu State University of Science and Technology and dynamic entrepreneur. Mr. Ikenna brings a rich and knowledge experience of our community, and as the founder of the Kells Nebo Home Improvement and an executive of Africa's business, and his exceptional spirit makes him an inspiring mentor and an invaluable resource for our participants. So thanks for this whole experience that you bring on table, and I want you to now address all our viewers for your incredible knowledge and experience.
Okay. Thank you all. Thanks for being here. Yes, I'll be taking all us on accounting and taxation. So let the slides roll to the next. So what's accounting? It's in a very short term. It's the process of measuring, processing, and sharing financial and other information about business and corporation. So if you're into a business and you don't have a plan for accounts, that's bookkeeping and your records, I'm not sure you're really ready for the real thing, because once you're establishing a business, you must have room for accounts, because that's the engine of the business if you want growth. So to the next.
Yes.
Yeah, there are types of accounting and bookkeeping. We have the cost accounting, which is the process of assigning cost to cost objects that typically includes a company's products, services, and any other activities that involves the company. So costing basically is, it helps to optimize pricing, it helps you to reduce expenses and also improve profitability in your business. Because if you're starting, for an example, I'm in Nigeria, you're using like 100,000, you must have your cost plan or your cost accounts for it. Maybe from the 100,000, you're to remove 20,000 for expense, you're to remove your carriage inward and outward, you're removing 20,000. Then your purchases for your goods, you're removing 50. You have to keep those things in records so that it helps you to validate if you're really, if that business is worth doing or not. So you must just know this first type. Your cost accounting is very essential in your business. You can't just do without it, because you can't just get money now and just go into the market and just buy all sorts of things. Definitely you're not making heads with for yourself. Then we'll go to the next. That's financial accounting. Is the bench of accounting concentrated, concerned with the summary, analyze, and reporting of financial transaction related to a business. So in financial accounting, what you really need there is, that's where your, or we like call your cash flow, that's where your cash flow statement comes in, your income statement comes in, then your balance sheet comes in. It's under your financial accounts, because your balance sheet is every period, every end of the period, probably you do yours for 6 months, you audit yourself to know how far you're going in your business. That's your balance sheet. Then your income statement is what comes into your business. Maybe you buy a goods of 20,000 and your expected profit is 5,000. So you must have an income statement for it. And you must have a balance sheet. The balance sheet comprises of your purchases, your expenditure, your carriage in and out. And what's your carriage in and out is I go to a shop, to a warehouse, I make purchases. That's my carriage inward. Then the carriage outward is the logistics you use in bringing it out, because all those things are expenses, breakdown of expenses you do down to get those goods to your store. And from there, from your financial statement, that is where you can ascertain your profits. Because you can't just go make your purchases, you don't include your expenses, your carriage in, your carriage out, probably machineries also, and you just summarize profit for yourself. It doesn't work that way. So with a good accounting and a good bookkeeping and a good financial statement and financial accounts, you can really ascertain all those things. Then we move to the next. Then another type of accounting and bookkeeping is marginal accounting. Marginal accounting use account information in decision making and to assist in the management and performance of the control function of some common areas of management accounts. Okay, cash flow analysis, budgeting and forecasting, job booking, job job costing, inventory, and turnover. So marginal is, to me, it's almost the same with costing. It's the same, but the only thing is that you're looking for a margin, and that where that margin comes in is what's your profit like. Okay, after all my expenses on item A, that's a book, I'm spending over 20,000. Go to bring it into my store, both the person that carried it from the warehouse down to the store. So you need to get all those things in check. That is when you calculate and you can get your margin. And getting those margin depends on you. Probably after all expenses and purchases, you're getting like 30, that's 30,000. You could use 10% of it or 20%. So it all depends on how you want it to be. But your margin accounting is needed in your financial book and recording. So we move to the next. Your petty cash. The petty cash book, registering of little day-to-day transaction. This petty cash book it's like, to me, it's what every business owner needs to have. Even from your little shop in front of your house, you need a petty cash. It doesn't take much to get. All you just need to do your petty cash is you have your particulars. That's things you're selling, you have your debit, and you have your credit. So it's in and out. If I sell tomato for 15 naira, I, I debit myself for the 50, then I credit it for the 50 because it has left my store. It's no longer with me. So your petty cash book, I believe every shop owner, no matter how little it is, you need to create your own kind of petty cash because it helps you take stock of what is remaining on every shelf in your business. Petty cash helps you also to ascertain quantity of stock still remaining. For example, you have like 20 pieces of tomatoes on your shelf. With your petty cash, you can know how many is remaining. Even if the ones which are spoiled, through your petty cash, you know, okay, if I'm to raise a journal to that effect or not. So in all this, you just need to be a good accountant yourself as a person. Basically, you don't need anyone to teach you about numbers on ratio, on how to go about your daily routine with your business. But once you apply accounting in your store or anything you do, it balance you. It balances the equation. And without accounting, taxation can't come in. Without it, it can't come in. So you have to know what and what you're involving yourself into. And involving yourself into, you should have a basic, you should know the basic rules of accounting. It's forget the terms being used, but it's just like a normal way of life. You wake up in the morning, you take your bath, you have your routine for the day, you do your calculations for the day. Okay, I'm going to so place and to spend this amount, I'm to spend this, I'm to do this, I'm to do that. It's the same way of accounting too. You open your store in the morning, you take your inventories for the day. That's your inventories, the stock you have. Instead of pulling off your shelves, you open your book of original entry. That's your book of accounting, maybe your petty cash, basically your petty cash book. You could ascertain through it what and what is missing. And it reduces stress and fatigue once you have a good accounting book. Because if you have that, you can only do your stocking end of the year. That's where your balance sheet comes in, which is your balance sheet. So once you get to your store, you could just open your book. You know what's remaining in your inventory. You know those who you've given credit, the credit notes which you have, those who are with your goods. So accounting is like it's everything. You can't just wake up and feel you have it all here in your head. No, it's not something mental. It's something written. It must be written. There are strokes to line to it. So to the next slide. Then we are going into taxation. This is the biggest problem of the whole world right now. Even currently in Kenya, due to the Financial Act, the increment of a whole lot of VAT the government did. So what's taxation? Taxation is the imposition of compulsory levy on individuals or entity by government in almost every country of the world. Taxation is used primarily to raise revenue for government expenditure. Through it can through it can serve others' purpose as well. Taxation is owned by the government because the government owns the land. We are all tenants on the land. So you can't just, it's different from bookkeeping. The government gives you the law on how to go about it. So it's not something you wake up and tax yourself. No, it's something it's owned by the government. The government assign it to people. And the only way they can assign such to you is when you have a good accounting record. If you don't have a good accounting record, you can't be taxed. Probably you can even get into trouble with the government because it's more or less like, what are you doing? No records to show. So taxation is owned by the government. Next slide. Is owned by government, and you just have to follow their rules and regulation towards it. Also, taxation has remained a controversial phenomenon. Most nations, especially developed economy, cannot do without the imposition of tax, and the citizens and corporate body. Before tax can be imposed on an individual or business, there are two things needed to put in check. So before government imposes tax on you through their tax officers, they must have what we call year of commencement. That year of commencement is when the year the business started. I'm not saying once you start a business, you should run up to the tax officer and say you want to start paying tax. You're at your own risk. You have to have a good, that year of commencement, you have to have a good accounting data for the business. What that year of commencement really means is the year of which you started the business. Probably you started your business 4 years ago, 1st January, so year, and you're running it and it's still going on well. And the second one is year of cessation. That's you'll be running the year. That year of cessation only comes when you feel okay, you really want to close this business down. You don't want to continue. You want the tax officer to come and audit you. Then you pay off your outstanding taxes and everybody goes. But that year of commencement is like it's everything. That is where they ascertain, okay, how much they will charge you, or what VAT will they use on your business to charge you. Then to the next slide. Okay, the commencement rule governs how the taxable profit of a company will be determined in the first 3 years of business. These first 3 years, every country have their own law. Some might be 5 years, some might be 6 months, some might be that same year. But I don't think that same year works at all any part of the world, because that same year you might go through a lot of challenges. They all understand that. You might be going through a lot of challenges or a lot of that. So probably in 2 years or 3 or 4, it all depends on your location. Then year of cessation, that's when you really want to hand over the whole business. You're no longer interested. You've done it for a couple of while, and it's time for you to let go, and you want to pay off your tax. This is where the year of cessation comes. If your year end stays at 31st December, I heard the profit of 12 months period would also be completely executed and taxable. Taxable. Okay, executed from tax. Sorry, applies monthly when you shut down your business. That's December 12 months period would also be completely excluded. Sorry. So what it means is that 12th month or that last year is indirectly is like the same thing with your first year, because your first year can be taxed. So if you run the business for 12 years, they'll tax you, and you want to close it off, they'll tax you for 11 years. Even some countries can tax you for 10 years on the 9 years, not 12, because they know what you've been going through. Probably you're going through challenges or so. To the next. Yeah, okay. Basic rule in calculating income tax. There's what they call PYB. That PYB is payable income tax. That's a preceding year basis. That's PYB. Preceding year basis means the assessable profit of the previous 12 months accounting period is subjected to income tax. Then the other one, the election rule. Right to election means a taxpayer can choose to be ascertained to tax on an actual year basis, actual profits for the second and the third year. PYB is almost the same thing like commencement. This election rule down here is in every 4 years we have election. So in that four years, you only tax for 3 years, because the fourth year is basically seen as you're not sweet for that. God is busy. You can it's the fourth year. You only be taxed. Therefore, the election law country and so
Um, Sorry, Mr. Nebo. I guess there are some connection issues. There's a bad connection. Um, I feel like we have to go again with the election rules because the voice was cracking in between, and I want every word to be clear for our people so that because it's a valuable information. So I want you to request you please go again with the election rules.
yeah, to the next one, please. So
Yes. Can you hear me? Yes, Mr. Nebo. If you can hear me, can we again go with the election rule? I guess there's a bad connection, and Mr. Nebo cannot hear me. But as all of you can see on the screen, like he was explaining what are the basic rules of calculating income tax. And whenever Mr. Nebo, you can hear me, please go ahead with your information with this slide. Can you hear me right now? I guess he's fixing the problem. But as he was speaking about all the accounting and taxation, very informative slides. Those are presented by Mr. Nebo. And earlier he has spoken about marginal accounting and cash flow, petty cash. And right now he's talking about the income tax. Everyone, all of you who is following us through these slides. So I guess numbers are always complicated, but the way Mr. Nebo was discussing these numbers and how we can calculate our income tax and what are the different rules with the countries, especially in the initial year of the business and the election rule. So I guess that's very valuable information. And I would like to read out this election rule because I guess there the connections got quite poor. And as much I understood, as being a participant of this regular lecture, the right of election means that taxpayer can choose to be assessed on tax on an actual year basis, and example actual profit of the second and third year. This is something uh, I would again ask Mr. Nebo to explain through. However, till the time Mr. Nebo will again join us back, we'll proceed from this information, from this piece of slide. And in between, I would like to take this opportunity to tell you, all of you, please, these are the ongoing and regulars lecture on our website, so on. So I would like you to request you to share with our website, with our social media handles, so that you can follow and get information about our upcoming lectures. And Mr. AJ is on the screen now.
Thank you very much. Can you hear me?
Yes, you are audible.
So sorry, everyone. Of course, we all know how
Yeah.
our net over here. So um, hopefully, Mr. Kell will be back soon. Otherwise, he already discussed how important it is to, as a startup, to actually start your bookkeeping as soon as you start your business. And he already mentioned, for example, is a way of life actually, as opposed to how most of us, when you say accounting and taxation, and you are like, what is that? But it's actually that simple. If, for example, as a startup, you're starting today and you are opening your business today, and if you sell 50 naira, 50 Kenya shilling, Ghana, or any other currency, safer, and you are spending maybe, let's say 20 or 15 naira as your cost of production, which may be this cost may include, for example, you have to buy raw materials, and you will need to put that cost. Is that simple, either by way of using a software, or you are simply using a normal manual bookkeeping. You choose which works for you. These days, we advise that you use software, so that there are a lot of software you can easily use for bookkeeping, which allows you to actually calculate at the end of the day and give you a statement without have to manually calculate this information. So while we wait for him to join in, I would probably say is one topic that most of us shy away from, but it's an important topic. In Kenya, for example, let me use the case of Nigeria as an example, because for example, the government actually all of a sudden woke up to this um, taxation, especially for small businesses. In those days, the focus was on big businesses, but these days they are really more interested now on small businesses. And for example, if you have not been doing your annual, let's start with, for example, annual CAC returns, for example, we're given a few days, a few months, which actually end this month, last month actually. And if you don't file, you are in trouble. And actually, this is not much. Then the second one is the maybe personal income tax itself. For example, for individual who maybe you are running uh, a business that you registered with your name. It's called business name registration. Said you're running that business, and so you are not actually supposed to be paying a normal tax, but you are supposed to be paying as the owner of the business. The business is not supposed to be paying tax. So for some people, where the main problem start, as he has mentioned before, is actually okay. Mr. Kell is back, so I will just hand over. Then maybe I'll continue my thought later.
Yeah,
So
very
Mr.
sorry.
Kell is.
Yeah, as in yeah, election rules. So with what AJ has really said, though, it's everywhere. It's happening. So we just have to, be careful and um, how will I put it? Let's just be more careful with our bookkeepings and our entries so that we don't get into trouble with the government. So with the election rule, you'll be taxed only on 3 years. The fourth year, you won't be taxed because that period campaigns are going down, elections are here and there. So let's go to the next. Yes, types of income tax. We have the end income and the unend. The end income specifically refers to all incomes that emit from a trade, business, profession, vocation, or employment carried on or exercised by an individual. End income comprises of profit, salary, wages, bonuses, commission, payee. Normally here in Nigeria, we call it payee, pay as you earn. So it's it's like if you're a salary earner, some quota of your salary is removed, then your director adds to it too. Like for example, you're earning like 50,000, you'll be paid let's say 48,000 naira. 2,000 goes, 1,000 goes for your insurance, then 1,000 goes for your payee tax. Then your director too adds another 1,000 naira for you. So it becomes 2,000 naira. That's for example. He pays that money off. What that signifies is as long as you're working and you're earning, the government should know about it and you should be taxed on it, on that money, because there's no free money anywhere in the world. You must be taxed. Even if you're under an umbrella covered or anything, that's where earned income comes in. The government taxes your salary through your director or through your head of account, or depending on the department you are. And also, it goes in a long way in your business because as a business owner, a sole proprietorship, you're the only person in your business. Probably you have a sales girl or you have like two workers help assisting you. You have to pay your payee as a director. Probably you can incur it depending on your discussion with them in the tax office. You can incur all of that into your payee, and those ones goes off, is being paid. So there's another called unearned income. Unearned income refers to income from sources other than gotten from employment, businesses, or reward for services. And the example of such unearned income includes earnings from royalties, trademark, pattern rights, parent rights, and all those things. What it really means is you won't be taxed immediately. Is this kind of taxation is for future. It's taxation that we ascertain later. Probably you're trying to do a brand. So as your expenditures on those brand, everything you're going about the brand, the tax officers, the tax officers, they know about it. So it's called an on end. They leave it for a period of time, then they tax you on it. They leave it for a period of time, they tax you on it. It's just like the likes of the Louis Vuitton, the Gucci. Most of them go with this on end income because they have what they call it trademarks. So it's not a monthly thing, it's not a 6 month basis. It's not a yearly thing. They can just come like after 4 to 5 years. They send in their tax report about it, and you just have to pay it because the land is owned by the government, not by you. To the next one. Reasons for taxation. As I've said earlier, it's government. That's the way government make money. It's not an individual thing. It's run by the government. That's why in Kenya, all over the world, even with what's happening in Ukraine, it's all taxpayers' money. Because the world, before a government can run, you need to pay tax. So the reason for taxation is government services. Taxes can be levied to cover the cost of administration, internal and external defense, maintenance of law, and order, as well as social services. It can also be used as support for companies. This this support of companies like tax are instruments used by government to protect companies in their infant stage. This is done by reducing specific tariff, which will inevitably reduce the cost of production relative to imported product that may be sustainable. Yeah, blah blah blah. You can read that. Then what it means here is support of companies. Once you pay your tax and you been audit, government can give you waivers. Probably you're into the oil and gas. Government can tell you, okay, ticketing for 100 trucks, it's your waiver. Or they can tell you anything ticketing, there's no need for you to pay on it. That is part of the waivers for paying your tax. So, and also another important thing about it too is if an investor paying tax, if an investor wants to invest in your business, as I am now, if I want to really invest in a business, I won't even look at the number of goods you have in your shop. To me, it's a mirage. I will definitely ask you for your equity. And what are your equities? Your equities are your bookkeeping, your invoicing, your cash flow, your in and out. Then I will also ask you for your tax reports. So with those two documents, I can use it to invest in your business. Probably in every year you're making good sales. Why? Those are the benefits of taxation. And also, what it does too is it helps you. It helps you get loans from government. Like down here in Nigeria, if you count a good bookkeeping, you can go to the Bank of Industry, you apply, take some period of time. So
Yes. I guess again, there's a bad connection. I don't want any information to go under this bad connection. So we will urge Mr. Speaker to come again and join us, and we'll proceed from here. And I guess in the portions we are getting all this information, and that written information is also present on the screen. However, as I can see the comments as well, many of you are asking about the slides as well. And Mr. AJ is also again joining us. Yes, Mr. AJ. I guess you can unmute yourself.
Thank you very much. While we wait for our speaker to join in again, he was already discussing about reason for taxation. Most of us, when they say tax, we are like I was saying before, we are like, why? Especially from developing countries where we have not really seen the benefit of paying tax. But I always say that if you are starting a business and you plan to grow, then it's important to get used to paying tax. That's just it. And some of these reasons, as he has mentioned, include governmental services. For example, he has already mentioned other examples, but if you want to bid for a contract from a government in your country, for example, if you would have to prove that you have been paying your taxes. In fact, I remember times that we wanted to go into a partnership with a certain international company, and the only reason that that partnership never worked was because we could not, as at that time, provide them with enough evidence that we actually have been properly filing our taxes. And from that time, I realized how important it is if we had actually started from after the first year when we were due. And the most funny thing about tax, though, is that some of us don't even know that you can actually file tax report without actually paying in most countries, because most countries actually have you have to have a certain amount of incomes for you to actually pay tax as a business. So it is important to always start your bookkeeping. At the end of the day, get a proper accounting, an auditor, an expert to look at your account and audit it, and then they can advise you whether you even need to pay anything at all. This depends in your type of business, as we already discussed business formation yesterday. So this depends on the type of business, and apart from that, it also depends on how much you actually are earning at that point in time, and whether you are even required to pay tax. So some of the advantages, of course, reasons include government. So if you are going to bid or entering a partnership for a company, or you want to bid for a contract, maybe with the government, uh, chances, or actually in most jurisdictions, you will be required to actually show a tax compliance certificate at least that shows that you've been paying tax. Support of companies, of course, I already talked about that, but he is here. Let's hope that his network is stable now. Mr. Kell, can you hear me?
Yeah, I'm back. Sorry, just the network. So let me summarize it all. So control importation, harmful products. So government use taxation to reduce importation of harmful beverages. What do you call it? Like here in Nigeria, tramadol was at the point was like a very big thing. So what the government did was to put a high level of tax on it. So to discourage importation of tramadols, all those harmful drugs, harmful products. So that is why taxes and levies are being imposed. To the next slide, please. Yeah, reasons for taxation: redistribution of wealth, counter inflation, provides subsidies, national debt, and co. Yes, taxes are important instruments of government in the areas of redistribution of wealth and co. What it means is once taxes are being paid more, that is where you come up, where that is where all these social security is coming. Because once governments have money, definitely they can use it to build utilities like hospitals, schools, like in Africa, hospital, schools, and never every other entities. Then they use it to counter inflation. There are some taxes are also used to counter inflation by reducing the volume of purchasing power. This is another a very big way of reasons for taxation. Because if you don't tax, a lot of people I can just go to the market, buy something of 10 naira and sell it at 2,000 naira because I'm not being taxed. I have autonomy over what's coming into me and what I give to others. But once I'm being taxed, I can ratio myself around it. And sometimes government gives you, okay, you sell, that's where price control comes in. You sell at this particular amount and co. They provide subsidies. It's just like in Nigeria, they've removed the fuel subsidy. There are other places government put money into. So it's still part of the taxation. National debt, government pay their debts through the taxes we pay. Once you pay your tax, those debts are the government pay off their debts. Then the next one, please. Yeah. So this is like, to me, there are two different types of accounting tools you can use. You can use with three, and there is pitch. But this tally with 9, it's everything. It has a petty cash book for your small business. It has an inventory section for everything you bring into your store. So you basically don't need to do much of stock keeping end of the day, bringing out it one by one. You could just click on your inventory section or your tally and you get everything done. Yeah, thank you. So any questions?
Thank you very much for this whole information, and it was very much elaborated with great examples. And I guess this is the most complicated thing in any business. Like people, those are willing to start doing something. So I guess this is the most complicated part, but you explained it really amazingly. So thank you very much for that. And here we go with our question. So our first question is. Mr. Oguchi, like they are saying, please, sir, is it immediately you get your TIN that you start paying tax for your business? So this is our first question, Mr. Nebo.
Yeah, no. You don't pay
Okay.
immediately. You don't start paying taxes immediately. As I said earlier, you're just starting. So you have a year or 2 years to build yourself. But in your book of entries, you must state it out. This is the year I started. So that once you go to the tax office, they all know. They all know you can't. You don't pay tax immediately. What profit have you started making? You're paying taxes on. You're not making anything yet. So you have to um, build your business, build your account book for at least a year or two. Then you can.
Yes. All right. Thank you very much. I guess Oguchi got the answer. Because we are taking all the important and some questions, those can help others as well, and people can have the whole information regarding. And here's Yovani, and she says, "Sir, when is the right time to start paying tax as a business owner?"
Yeah, the right time to start paying tax as a business owner is when it can take you 2 years. Normally, a normal business should take you at least 2 years. You can start paying tax. Once you start making money out of it, and this money you're making is sufficient, you can pay taxes. But that doesn't mean the government doesn't know about it. They all know, but they ignore you till you tender yourself to them. Then they
Yeah.
begin to ascertain. So whenever you feel okay, I'm good to go. I need some government benefits. I think I have the money to pay my dues to the government and get my benefits. Why? You can. It can take you
All
two
right.
years, it can take you 3 years, but just know the government is watching.
Okay. So they are always reading you through, and yeah, it will come across. And the next question is, how can I improve my cash flow with accounting?
Yeah, you can improve your cash flow. You can improve your cash flow with accounting through your financial statements, your balance sheet, or your income statement. So what it means basically is what comes in. Okay, I'm doing a business. And I'm saying this thing now. Every year, I'm having a total profit for a year of 100,000 from it. You can diversify with it because you know, okay, you're making you're making money, so you use it to improve your cash flow. So that is where you have your financial statements, your balance sheet. From your balance sheet is the best form because at the end of your balance sheet, it's either you're carrying forward or you're carrying forward an amount which is negative, or you're having a balance brought forward of an amount which you can use for the next period. So once your bank statement, your balance sheet is telling you false, then you have to improve on yourself. Probably the business is not going well, or if you're into the manufacturing, probably your, what do they call it, your machineries are having issues. Maybe you need to do a repair. So you can only increase your cash flow through your balance sheet.
Right. And this question was with Mr. Abibo. Thanks for asking this question. And Dalasan is asking, like, my question is, what are the two things you said needed before government imposed tax on you?
Yeah, the two things is before government imposes tax on you is number one, you should know your ROI, your returns on investment, you personally. Then number two is to know your return on your equity. That's both through your book statement, because you can't just wake up one morning, you sell biscuits for 1 month, and you run up to the government and you tell them to tax you. What are the basis? So you must have a good bookkeeping. That is the essence. You can't tax without having an account, a personal account for yourself. So you must have a good accounting book. Then good, and that is your return on investment and your return on your equity.
Right. Thanks for this. And Paul is asking, is renewing CAC same as paying tax? If yes, how can I renew my CAC, please?
Yeah, renew your CAC is not the same as paying taxes. Yeah, you have it's still part of a tax, but it's not your basic period. It's not your PYB. So renewing it, it's different. And if you want to renew it, there are so many tax officers. If you're in Nigeria, there are so many accountants, tax officers. If you don't know anyone, you look for a good accountant, a chartered accountant. They know the guidelines on how you go about it.
All right. Thank you. Thanks for this answer. So I guess this is very much clear to many people. And Loli is asking, are you in control of how much tax you want to pay, even in a high earning business?
No, you're not in control. You can't tell the government how much to tax you. For your entries, there are laws to it first. Every country will have a law. Okay, if it's 2%, if it's 25%. So they know from your entries, all your entries, good. Once from your entries, they know the percentage they use on you. There's left for you. You could go to their office and challenge it.
Right. All right. Thank you. And our next question is from Ayakul asking, do you mean my annual sales income determines if I am eligible to pay tax?
Yes, because that's where your balance sheet comes in. So, and you only prepare your balance sheet in every 31st of the year.
All right. Okay, thank you very much. Again, now we're gonna take some other questions because like extremely very beautiful, and the curiosity says like how much people are interested in this. So there are so many questions coming through about these taxes and when they need to start paying these taxes. So thank you very much, everyone. There's another question from Rahim asking, shouldn't tips and other money, which is indirectly part of the business, should be excluded from tax?
Yes, that is why we have indirect tax. They come in at VAT. Tips, tips, tips is not included because there are no basis for tips. Tips is goodwill. I call it goodwill. It's goodwill. Okay, I get something from your store, from your relationship with me. I give you a tip from it. So you have indirect taxes. You get your bottle of Coke. You've been taxed, but you don't know. It's when you check your voucher, you see
All
it's
right.
tax VAT at probably 000. So tip is not among, but there are indirect tax. You use your POS machine, you've been taxed on it. So, but it doesn't go to you directly. It goes to the business owner who is using the machine or who is using the premises for it.
All right. Thank you very much. And thanks, Rahim. Now, the Thomsper is asking, please, what category of business is exempted from tax?
Um, it's it depends. As long as you have an office space and you have a signal outside of your office space, you must be taxed. You must be taxed. Except like right now, like in Nigeria, the government was trying to impose digital tax. That's the use of if you want to buy, like you want to buy something from Amazon, you want to buy something from Kunga, they were trying to put in tax on it, but due to some discrepancies between the government and the people, they had to remove it off the system. So right now, I feel it's those who are into digital business that are not paying tax. Even those who are hawking around the roads in Nigeria here, they are tax officers from the local government. They pay tax too. Some is every month, but in
Yeah.
which because those taxes are not being it's not being registered, but it's being registered by the local government because they give you a ticket, and those tickets are your evidence, like they are your buying power. So I feel the only people exempted are the digital world for now. That's in Nigeria. I don't know any other places in the world.
All right. Okay. Thank you very much for this. And now we are approaching the end of this session. So I'll take, I guess, one or two question hardly. So I guess there are so many questions briefly, but I guess like all the important question has been answered. Like people are curious about knowing is there any business which can be exempted from tax and what are the initial taxes they got to pay. So I guess you have answered them really very well, and they all are, I guess, very much informed about it. So it's really amazing. So at the end, Mr. Nebo, do you want to address something like after hearing these questions? Can I ask for your ending remarks? But there's one more question with the it's coming just on screen and going, but I will proceed and I will ask you, are there any closing remarks and tips that you want to tell all our entrepreneur? But before that, I can take one more question so that later you can answer that. How about the issue of double taxation, first and state taxes in Nigeria for MSME? How can it be resolved? Why is there no unified tax system? I guess a very good question.
Yes, there can't be if there is a unified tax system. That means the incomes we make they should be the same, because you can't compare the tax system of a manufacturing company to a tax system for a person who has a shop along the roadside. The profit margin is different. The cost of production is different. The performance evaluation is different. The compliance and regulation is different. Both the internal and external control is different, and it can't work. So if we use, to me, my own understanding, if we use a one tax system, so many businesses will go off because they can't cope. So it can't work.
Yes. All right. Thank you very much for this answer. It was very insightful. And Mr. AJ is also on board right now. As I was saying, Mr. Nebo, can you please, any closing remarks you want to give, any tips for our upcoming entrepreneurs? You want to say something to them at the end?
No, I didn't get that. Or
Yes.
is it you?
Like, yeah, any tips at the end you want to say? Like, we are heading to the end of this session right now. So, after hearing all their questions and their
Okay,
curiosity,
okay,
do you want to say
okay.
something at the end?
Yeah, I want to say something. The only thing I really want to say is in whatever you doing and transaction is involved, keep records. Keep
Right.
records. No matter how little it is, keep records. Those
Yes,
those records you keep in are your buying power. They are your equities. You can trade them for another business. So just keep records. That's all.
of course. That's an amazing tip that you have to have a record so that that can be like your experience. And as you said, like for your future
Mhm.
business, that will be very valuable and very intense as well. So I guess that's amazing. Mr. AJ is also here. I guess he would also like to say something. Yes, you can unmute Mr. AJ yourself.
Thank you very much, Anu. Thanks to our amazing speaker for the day. It's been a wonderful session. Also to our amazing African entrepreneurs. I just want to say that taxation is not a thing we should run away from. And that's why the topic actually started with accounting, because at the end of the day, it's actually out of what you have earned that you are actually giving a part of it to the greater good of your community. Of course, giving the government as a custodian of that resources. So what I would say is, when you are starting, keep an eye on your accounting, as the speaker has said. Make sure that your records are clean and properly. There are two mistakes that I've seen some a lot of startups make. Either you inflate your income to appear like you have made it. This might sound very interesting, but at the end of the day, it actually comes back to haunt you. So keep your record clean, and some people also would want to try as much as they can to beat down their bookkeeping in the sense that beat down their incomes just to reduce the amount of tax you pay. But at the end of the day, like we have said, there are a lot of ways to navigate tax, not necessarily not to pay, but to actually reduce. Because remember that, like the speaker has said, you buy things every day, and if you are buying as a business, then at the end of the day, I know a lot of jurisdictions that if you are buying as a business instead of buying as a person, then you end up not actually paying double taxation, as someone mentioned. So if you're able to prove to your tax authority that you actually purchased raw materials and you already paid VAT on them, then chances in most jurisdictions that you don't have to remit that VAT again to the authority as a business, because you had already paid VAT on that raw material when you were producing or offering that service. So it's all about, during our starting small is when most people get it wrong. Pay attention to your incomes, pay attention to your bookkeeping, and at the end of your annual, that is end of your business year cycle, make sure that everything is clean by inviting a professional, an auditor, or at least an accountant to look at your record and advise you. It's very important, as the speaker has already said, because by the time you enter your growth stage, when you are supposed to start growing, getting partners, investors, getting contracts from big companies, corporations, or government agencies become completely impossible, because they will go back to look at your small beginning, and that is very
Mhm.
important. So that is what I just want to add. And thank you so much for joining in. Over to you, Mrs. Annie.
Thank you very much, Mr. AJ, for this advice. It was very intense and insightful, and keeping your record clean and clear is very important. As I can go through with this whole information with this session, this is the takeaway. I guess, for all the participants here, that keeping your records and your accounts clean and always clear is very important. Paying attention to the taxes and invoice and accounting, it's very much important to us. So I guess, thank you very much for speaker, for Mr. AJ, and all the participants and all the people those have joined and have been through with this whole 1 hour. I guess this information was very useful, very informative, and all thanks to you, Mr. Speaker. So thank you very much. And at the
You're
end,
welcome.
thank you very much. At the end, I would like to again say, please keep tuning to NT for this more wonderful sessions. Those are upcoming, and please follow our social media pages for further information about all the next and upcoming lectures. And all the information will be given on our website. So please stay in touch and keep us following. And thank you for all the good wishes and your comments, everyone. Thank you very much. Thank
You're
you.
welcome.